I can precisely remember when my perspective on the market changed. You see, I was that guy who was always upset because I took a loss, right? Because I had a good strategy, I had a good risk reward ratio, I had a good win rate. So in my mind, I was always expecting wins. I was always expecting positive results, right? So here I came in the market, took trades, and then I lose the trade. I'm like, what is happening? I take a trade, I win some, but the losses always hit more. And it was always a life of highs and lows constantly. You win, you feel excited, you're happy, you take a loss, you're depressed, you're upset. And I knew that wasn't going to happen for a very long time because I wasn't able to actually manage to do that because I mean it's unhealthy. That's when I came across Mark Douglas, the guy that changed my perspective when it comes to trading, on trading psychology. You see, I came to an understanding that, like, it doesn't matter what you do in the market. It doesn't matter how much of a win rate you may have. It doesn't matter your risk reward ratio. You and I don't have control over outcome. The moment I actually understood and internalized that fact, everything changed. Now I can take a loss without being feeling unfazed. Of course, it will sting, but not as much as it used to. Then it was actually small money, but right now I'm able to lose a lot of money and still not be upset as they were used to be. Because now I understand that losses are going to happen. And you and I have no control over outcome, no matter how much you would like to, right? So you have to understand that no matter what you and I do in the market, you can never know the outcome of the next trade. So we ought to have a series of trade mindset where you're thinking in terms of larger sample size. Mark Douglas talks about 15 to 22 trades. You judge yourself after taking those trades. Don't judge yourself after taking two trades and then you judge your system. No, that's too little of a sample size. So give yourself time. If you're going to backtest your strategy, backtest it and backtest your strategy so that you can prove that your strategy works. And once you do that, you are going to realize that the wins and the losses occur in a very random fashion, and you will never be able to predict exactly what's going to happen, even if the setup looks like an A plus trading setup. So the sooner you understand that, the more you'll be able to actually predefine your risk because you know that you don't know what's going to happen in the next trade. Like there's literally no way for you to know what's going to happen. So because you don't know what's going to happen, even though your setup says it's a very good setup, you ought to respect your risk management. You have to predefine your risk management. How much am I willing to lose on this particular trade? If this trade goes against me, how much money am I going to lose? That you need to be able to do even before you take a trade. Say you're risking 2%. Say, okay, I'm okay losing this 2%. If this trade goes against me, I'm all right. That's the first thing that should happen before you take a trade. But of course, we know that 95% of traders do the opposite. They just enter trades randomly without knowing exactly how much they're risking on that particular trade. And then they're surprised by the loss, right? And then guess what happens after that? They try to get back in so that they can revenge trade. So if you don't understand trading psychology, you're in big trouble. You are in big trouble. So it's really, really important that you understand what happens here, what happens in our mind. You have to have a probabilistic mindset. Think in terms of probability. You see, our human brain is prone to, especially if you are in trading, you are prone to things like FOMO, revenge trading, especially revenge trading. Why? Because there's something that happens up here. There's a part of the brain that is called the amygdala, right? So the amygdala is this part that controls our emotions. It's the one that's able to actually control everything about emotions. And then there's another part which we call the prefrontal cortex. So this is the one that controls your executive function, your reasoning, memory, and all that. So it's the executive function, right? So what happens when there's a trigger? If you take a loss will be regarded as a trigger. If you take a loss right now, guess what? That loss will first reach the amygdala before it reaches your brain. because the amygdala acts quicker than the prefrontal cortex. Because of that, you're going to realize that you are going to do damn shit most of the time because the amygdala is responsible for fight, flight, or freeze. So if you take a loss, guess what's going to happen? You're either going to fight, freeze, or flight. So most of the time as traders, we are very stubborn. We fight. By fighting, what do? We revenge trade. We want to get back the money. Why? It's because you have been triggered. And before that message reaches the prefrontal cortex that is responsible for your executive function, guess what? You'd have already messed up, you'd have blown your account, and then start asking yourself, what happened? Start holding your head saying, what happened? Well, we call that an amygdala hijack. The amygdala has hijacked the prefrontal cortex, which is responsible for your reasoning. And later on, you're going to realize that, what did I do? Oh, I've lost my money, oh shit, all this, all that, right? So, what can you do in order for you to prevent those emotional hijacks, the amygdala hijack? You've heard of people saying, take a deep breath or count to 5. All those are meant to interrupt the amygdala. All that is meant to give chance for the prefrontal cortex to kick in because it takes milliseconds for it to actually kick in. The amygdala acts quicker by a few seconds, right? So by practicing meditation, by practicing mindfulness, by taking deep breaths, all these things are meant to actually give chance for the prefrontal cortex to kick in. So you can do things like exercising, practicing mindfulness, meditation. This is going to help you so that you actually prevent yourself from burning your accounts. Because the most immediate thing that's going to happen after you take a loss will be revenge trading most of the times. You want to get back the money that you've lost. It's understandable, but in order for you to actually prevent that from happening, and you need to do that if you want to become a consistently profitable trader. So you need to be able to actually control those imbalances. Others, you practice things like stepping out of the chart. You're taking a loss, guess what? You can take 10 minutes, do something. You can do something, do some exercises, some math exercises you can do, or switch off the laptop or the computer. By doing that, you are giving chance for your prefrontal cortex to actually kick in, thereby saving your account. So there are a lot of things that you can do in order for you to prevent those hijacks right there. So all this is trading psychology. If you don't understand these things, it will be very, very difficult. And understand why 95% traders end up losing. Hence, I love books like Trading in the Zone by Mark Douglas and The Disciplined Trader. The other book I love about trading psychology is the book by Tom Hogarth, which is The Best Loser Wins. He also talks about the same things, right? So, there are two mindsets. There are the 95% of traders and the 5% of traders. Guess what? The 5% of traders, when they're entering into trades, they predefine their risk, right? And they accept the outcome of a particular trade. And they're not thinking about the profits, they're thinking about the loss first. So you accept the loss in advance. The 95%, they do the opposite. They're always thinking about how much money am I going to make when I win this trade, instead of thinking about the losses. And by thinking about more profit, guess what? You are going to be greedy, and then you'll be tempted to actually over risk and oversize, and then end up blowing your account. And the other thing I love about what Tom Hogarth says is expect to be uncomfortable. When I'm entering into a trade, I expect to be uncomfortable. So when you expect bad things to happen, those bad things will have less effect on you because you expected them. The trade won't just go straight from your entry to your take profit. If it's in a downtrend, the market forms lower, lower, lower highs. If it's an uptrend, the market will form higher highs and higher lows, right? It won't just go straight to your take profit. The market doesn't move in a straight line. And you can be stuck in a trade for 3 or 4 hours. And it's extremely uncomfortable. But when you expect it, it has less effects on you. But if you're not, guess what? You'll be checking your phone every 2 seconds. Every 1 minute, you want to see what's happening. Because you've not accepted the risk, you've not accepted that this is going to be uncomfortable. You want quick results. So, all these books here are going to help you when it comes to developing a professional mindset of a professional trader. And That's what you have to do if you want to become a consistently profitable trader, unfortunately. So it's really, really, really important. So Mark Douglas has got, I think that's some videos that I watched on YouTube, part 1 to 4. Watch those videos because they're going to help you big time when it comes to trading psychology. As you come into the market, always understand that you and I have no control over the market, no matter how much we love to. You'll never be able to predict what's going to happen. Number two, anything can happen. If you take a trade right now, anything can happen, literally. And you have to be okay with that. And he talks about a lot of things that I won't manage to actually go into deep into them right now. All right, so I just thought about just sharing this so that you can understand how professional traders think and approach the market. So once you've understood your strategy, once you've understood your risk management, trading psychology becomes the most important thing, because if you don't take care of your mind, I can promise you, you can never become a consistent profitable trader. You can win here and there, but